Hello again, traders, and welcome back to the Hot Stocks Outlook for March 8th, 2024. I hope you all are having an excellent week out there in the financial markets. As always, we've got plenty to cover here in this week's Hot Stocks Outlook. So if you haven't already, make sure you go ahead and click on that link in the description below, and you can get yourself a live demonstration, learn all the specifics about this technology and how it can help you make much better trading decisions in the marketplace. Now, as we typically do, we can take a look at the S&P 500 via this SPY ETF. And so what we can see is year to date, we're up about 9%. We actually had markets bottom out last year around this time. So that's creating a 29% 12-month number there. And we sort of drifted sideways, but there have been some decent opportunities in the SP 500 inches a little bit higher day after day. But there's some really nice opportunities opening up here. And of course, we want to be positioned appropriately for when volatility comes into the market and things really start to move around here. So let's take a look at Kimberly Clark's a really good example of how all of these predictive indicators work together. And this really works the same way, whether you're trading stocks or commodities or futures and any other market here that we cover. It's really going to be the exact same indicators and approach. So what you're seeing here with Kimberly Clark, again, is daily price action, right? So each one of these candles representing a full and complete trading day. And it's right up against all that price data that you're going to notice are black and blue line values. Now, the black line that you're seeing there is actually a simple moving average, or what we refer to as the actual simple moving average. And this is a very common technical indicator in that it just looks back at the previous 10 closes. It'll add them all together and then divide by 10. And so what that does is it smooths out the existing price action and really lets us know where market prices have already been in the past, but it has no predictive capability. It's really just summarizing what's already occurred. And so what we want to do is compare that black or lagging moving average to this proprietary predicted moving average. And essentially for this prediction of price to be calculated and plotted every evening, well, this is where the technology of artificial neural networks come in and perform what we would call intermarket analysis on the target market in question. And so what the software and technology is able to do is look at other markets that are known to drive and influence the markets that you're trading. Now, this can be things like other individual stocks. It can be things like ETF groups that are going to wrap up a bunch of basic material and other stocks. It can look at things like the value of the dollar index, commodity prices like gold, as well as, global interest rates, right? So it's taking this global approach, looking at futures, commodities, individual stocks, ETFs, and generating a highly accurate price prediction of where things are likely to move next. And it's these price predictions that traders can use to make much better trading decisions on where things are likely to be headed here. So here with Kimberly Clark, we see whenever we see this blue line cross above the black line, well, it's suggesting that average prices are expected to start moving higher, and you would therefore want to take a long position. Now, depending on your strategy, it could be shorter term, longer term, but the point is over this 5% rally, what do you want to be doing? Well, exploiting that bullish side of the market. Now, in addition to that predicted moving average, you're also provided with another predictive indicator. Now, this bar at the bottom of the chart, you see it can go from green to red and back to green. This is called the VantagePoint Predicted Neural Index, and it's tuned to solve a different problem, looking for just short-term strength over the next 48 hours. So 2 days strength or weakness. I always like to think of just, the subsequent couple of candles moving forward. What should our general expectation be of strength or weakness? And so what we can see here is when we're in an uptrend, we'll get those periods where the neural index will go bearish. And you see that the momentum really dies down for that 48-hour period. But as the software updates and says, okay, well, the next 48-hour period, expect that momentum to come back in. And so when you understand, okay, we're likely to have some weakness, you can adapt that into your trading strategy and understand, okay, we may be running sideways here, but we need to stick with that trade and expect that bigger move. Now, lastly, you're even provided a predicted high and a predicted low. So now we're down to intraday price action that can help traders with entries, profit targets, and even stop losses. And so what we see here is once that blue line crosses above the black line, which traders can utilize tools like VantagePoints and Telescan to identify where these predictive indicators are shifting on day one. And so we're able to see these types of moves and say, okay, well, let's utilize the VantagePoint predicted highs and lows to understand where we might want to take a position. You see, you get a lot of this noise and volatility, but look what the market's actually doing. It's gapping down, moving down to close to this predicted low that was never hit. And the overall trend is very much bullish, selling off from these predicted highs, buying up from these predicted lows. And so every day you're getting this update that says, okay, well, Kimberly Clark, what should you expect here? We'll try to buy down at these levels, sell up at these levels, and keep adjusting that position. So what this allows traders to do is potentially build a position with profits that they can use to essentially finance the trade there. So about a 5% move there in Kimberly Clark. Here's Intrepid Potash. And so a little bit of an odd stock, probably not on people's radar, but we're starting to see a lot of things go on in CF Industries, Mosaic, a lot of these agricultural fertilizer stocks. And so here we looked at this a couple of weeks ago. And what did we see? Well, this is in a strong uptrend. We've got our neural index is very bullish. Now we have these earnings, which you get a little froth, usually going into earnings. But again, the beauty of this is when you can establish a position, you've got a lot of cushion to take on that risk. And when we've got all of these markets in the sector in an uptrend, well, you'd expect that something's going on here. And therefore, we can capitalize off of these entries where we established a position, again, use that to potentially finance the trade and then benefit when volatility really kicks into the marketplace and things start to move. So here again, we've gotten a really nice move recently after earnings. They're about a 21% rally now in just the past 18 trading days. A good example of this is Eastman Chemical. I just keep bringing this back in month after month and past couple of weeks here to highlight, well, when you have these crossovers to the upside, when we see a sector that has some overall strength to it, we can come in and start managing that opportunity. And so actually we looked at the past couple of weeks of Eastman Chemical, and we can do that again and really update this and say, okay, well, each week with these ranges of predicted highs and lows, you see this is this week, this is last week. And so you've had great opportunities to be buying down at these predicted lows, then go into the next week and say, okay, well, where do we want to be selling? Where do we want to be buying and benefiting as prices advance? So when you have these nice entries, I mean, you can lock in a stop at break even, be trading with profits as these trends start to develop. So really nice opportunity there in Eastman as things start to kick back up to the upside. Another about 6-7% rally just over the past 15 trading days. Now, one of the really exciting things going on is this situation in gold. And so we actually looked at this last week. I make these videos really Friday before the open here. And so we were all the way back here. And so you see Friday, Monday, Tuesday, Wednesday, Thursday, there's been something going on here, right? And I don't usually talk about ETFs, but gold's a very important market. And what we know is that with those intermarket relationships, it's going to understand, hey, what's going on in gold mining stocks? What's going on in gold, silver, and copper? What's going on in interest rates and dollar index? And then generate these highly accurate forecasts so that traders can understand, hey, if I'm trading gold and I want to get exposure via the GLD ETF, well, where should I be looking to accumulate these positions? And so we got this really nice early entry, and sure enough, really no looking back as we've gotten about a 5%, probably a 6% rally after today in the gold market here. So, gold, doesn't move around an awful lot, but when it does, you certainly want that exposure in the portfolio. About a 6.5% rally here in just 10 trading days. So certainly something going on within the gold market, basic material space, mining companies, all getting some exposure there. Now here's Apple here, and we've talked about this really since the beginning of the year. You haven't seen a lot of Apple charts because this does not look good. Apple, Tesla, meanwhile, the other stocks really look good, but now you're even seeing things like Microsoft start to roll over and some warning signs here. But here's Apple, and just about as plain as day, you get this crossover to the downside. Neural index gets bullish in here, and you get that sideways consolidation phase. But the overall trend here is down. And so this is really not a place you want to be and can really do some damage to your portfolio where, you've got the equity markets pushing up 8-9%. Well, here you have Apple down 9% in the last 17 trading days. So clearly not an area where you want to be in the market, but also potentially a great area to hedge, right? If you have those longs in the portfolio, you can go ahead and set in some shorts, really balance things out here. And we see Apple doing very poorly. We can look at those predicted highs and lows, and same thing, of course, doing a great job every single day to guide the trader moving forward and say, okay, if you want to get short positions, where are those really prime places, price levels to go ahead and set a position? And you see that we don't spend too much time up at these price levels at all before that downtrend resumes and things need to go lower here. So again, a pretty nice move to the downside here in Apple. And here's Texas Instruments, just to highlight again, there's this mixed nature, in some of the tech space and certain stocks. And so you really want to be in the right things. Here you see this blue line over black line, neural index very bullish. Again, get these little sideways periods where price runs a little bit sideways. But what you're noticing here is that not all the markets are bearish, right? We get these situations where, the NASDAQ and tech's doing quite well, but it's not an Apple, right? And so you want to find those areas that are more poised to benefit off of what's currently going on in the marketplace. And so here we see Texas Instruments having a nice run here just over the past few weeks, taking shares up about 9%, right? So, just as simple as that, you're positioned in Apple rather than a stock that's going up. And, the difference can be 18%, right? When you're in something that's not doing well while the markets are moving higher. So we'll go ahead and leave it there. But once again, this has been our Hot Stocks Outlook for March 8th, 2024. Thank you all for watching. Best of luck and bye for now.